Hey everybody, it's John from the Hustle Daily Show. Before we get into the show today, did you know that HubSpot launched an AI chatbot that helps you build awesome campaigns at scale with just a few prompts? It's called Campaign Assistant, and it's a totally free-to-use AI tool made for marketers and business leaders who spend hours a day on content creation. Campaign Assistant will transform the way that you build marketing campaigns at scale. Craft personalized emails, ads, and landing pages in just a matter of minutes. Just pick the content type, add the key selling points, and let the AI take it from there. And the best part, it works seamlessly with all of HubSpot's marketing and sales tools to scale your output across email, social, and more. So AI your way into the most effective campaigns yet at HubSpot.com/campaign-assistant.
Howdy folks, good morning. It's Monday, March 13th. I'm Jacob Cohen, and you're listening to the Hustle Daily Show. Today we're talking about Silicon Valley Bank's implosion. And yes, even if you don't live in Silicon Valley or maybe hate the show Silicon Valley, you should still know what is happening with Silicon Valley Bank, who's been impacted and what it all means. It's a developing story, but we'll give you the lowdown. First, though, let's take a quick look at what else is going on in the world of business and tech. Let's get crack-a-lackin'. All right, first things first, in the big tech department, Meta is reportedly working on a new project codenamed P92. Despite its name, it is not, in fact, the follow-up to the popular P90X workout plan, but rather a decentralized platform for sharing text updates. A Meta spokesperson told CNN, "We believe there's an opportunity for a separate space where creators and public figures can share timely updates about their interests," which, that sounds like a carbon copy of Twitter, but decentralized. And the project is reportedly in early stages and is being led by Instagram head Adam Mosseri, according to Platformer. Okay, moving along. In the oil department, Saudi Arabia's Aramco reported a record net income of $161.1 billion in 2022, up 46.5% year over year and nearly 3 times that of oil rival ExxonMobil. If you remember, oil and gas prices pumped up at the start of 2022 when sanctions began hitting Russia, and on a Sunday earnings call, Aramco's CEO said, "This is probably the highest net income ever recorded in the corporate world." All right, now for about 10 seconds, you can sit back and relax while we talk about some numbers from Hollywood. Scream 6 opened to a franchise best $44.5 million domestically over the weekend, seizing 32% of Saturday's foot traffic in theaters and knocking Creed down to second place. In other movie news, so far the biggest movie of the year in the world is Chinese blockbuster Full River Red, which has raked in $670 million in China so far. Moving along, snap, crackle, pop. Vinyl continues to have a comeback story for the ages. Sales topped CD sales in 2022, something that hasn't happened in 35 years. Last year marked the 16th consecutive year of growth in vinyl, with 41 million albums sold compared to 33 million CDs in the period. Last year, vinyl revenue spun up 17% and topped $1.2 billion for the year, and CD revenue fell 18% to $483 million, according to the Recording Industry Association of America. Also, some other numbers. The number of executive administrative assistants in the United States is trending down. Between 2000 and 2021, their count dropped 63% from 1.4 million to 508,000. And by 2031, the number is expected to drop another 20% to a little over 404,000. Also, the price tag on New York City's 1.5-mile 2nd Avenue subway extension to East Harlem is expected to now cost $7.7 billion, up $800 million from previous estimates, making it one of the most expensive per-mile railroad expansions in human history. And now, how about this? According to the Wall Street Journal, sales of the Instant Pot reached a steaming hot $758 million in 2020, but cooled 50% to a $344 million simmer in 2022. The company has recently hired restructuring advisors as it looks to now find a new recipe for success. Okay, so the truth is, it's probably not going to be a very restful weekend for financial regulators when you see the hashtag bank crash trending on Twitter. So Silicon Valley Bank collapsed hard and fast last week when insolvency fears sent investors and clients racing to pull out their money. And as we're recording this, federal regulators are kind of still sorting out plans, although they did come out Sunday night with some what appears to be good news and a plan to sort all this out. But they worked through the weekend to do so, and with the goal of helping make depositors whole. So many questions surrounding the implosion of Silicon Valley Bank, which is really a staple in the startup world. It can't be answered yet, but we're going to do a quick rundown on the situation to help you start to unpack this thing. So Silicon Valley Bank is a bank that, as its name kind of implies, primarily caters to a crowd of startups, venture capitalists, and tech firms. As of 2021, the bank claimed to bank for around half of all American venture-backed startups, as well as for many of the venture capital firms that fund these startups. And according to the Federal Reserve, Silicon Valley Bank was the 16th largest bank in the United States with some $209 billion in assets as of the end of December. Now, banking regulators shut the bank down on Friday after it imploded in a mere 48 hours or so, marking the second biggest bank collapse in U.S. history. Rest in peace, Washington Mutual. So first, why did Silicon Valley Bank collapse? Well, just 2 days prior, on Wednesday, the bank signaled that it was facing a cash crunch. The bank said it planned to sell $2.25 billion in shares to shore up a $2 billion or so loss it recently incurred. And that spooked investors and more importantly, the bank's clients and depositors, and its stock plummeted. Venture capitalists began telling their portfolio companies to pull their money out of the bank. The bank run ensued, and within 48 hours, the bank kind of just collapsed. Now, experts caution this isn't a 2008 rerun. For one, Silicon Valley Bank carried a kind of unique set of vulnerabilities, leaning on this roster of venture-backed clients and an industry that's had a really rough year in tech. The immediate focus now, many experts say, is just tamping down any panic that could lead to a run on other firms. This week will reveal a lot more in that regard. Banking regulators unveiled a plan Sunday evening to shore up the bank's deposits and provide depositors access to their accounts, which should help tamp down any panic. Now, as for any winners this week, and yes, there are a couple. One is just FDIC limit awareness. The FDIC only insures deposits up to $250,000. Having more than $250,000 is typically a good problem to have. Having it all in one account, though, well, now you can see the risks in that, and a lot more people are probably now aware of that. Another winner are subpoena enthusiasts. Some Silicon Valley Bank execs cashed out with some questionable timing. And last-minute bonuses were also reportedly dispersed hours before the bank collapsed. Scrutiny lovers are certainly in for a great week. And probably the biggest winner this week is the Inverse Kramer Twitter account, a parody account that highlights instances where CNBC anchor Jim Cramer's market commentary does not age well. One recent post highlights an article from CNBC titled, "Jim Cramer says he's intrigued by these top 10 performing stocks." And right there, at number 9, is Silicon Valley Bank. Insert facepalm here. And bada bing, bada boom. That's going to do it for us today, folks. By the way, before you go, get a load of this. Hidden Valley Ranch and Van Leeuwen Ice Cream will sell ranch dressing flavored pints at Walmart stores nationwide between March 20th and March 28th. Absolutely not up our alley, but perhaps it's up yours. Anyway, thanks for tuning in to the Hustle Daily Show. We're a proud part of the HubSpot Podcast Network. Our editor today is Ezra Trupiano. Our executive producer is Darren Clarke. We've got a lot more tech and business coverage in our newsletter, which you can sign up for at thehustle.co/email. Hope you have an amazing Monday. We'll see you tomorrow.
Hey guys, if you listen to the Hustle Daily Show on Google Podcasts, we want to let you know that the option will no longer be available pretty soon. Google is sunsetting its podcast app sometime in early 2024 in favor of YouTube Music, and we want to give you a heads up before it's too late, since that time's almost here. The Hustle Daily Show is available everywhere and anywhere that you listen to podcasts, like Apple Podcasts and Spotify. If you're using YouTube Music, we are there as well. If you're an Android fan, there are plenty of apps like Overcast, Pocket Casts, Player FM, and more. So just search for us wherever you decide to listen to your favorite podcasts.